Good morning and good afternoon to everybody who is joining now. Very warm welcome. Thanks for joining this technical webinar that is organized by the Inclusive Rural Finance team of the FAO, the Food and Agriculture Organization of the United Nations, and the GIZ, the German Agency for International Cooperation. I am Azeta Tsu, I'm Rural Finance Officer with the FAO, and I will be moderating the session, this webinar today. As you know, this webinar will focus on the role of the enabling environment in shaping financial services that are inclusive of rural youths and respond and are sensitive to their needs. But what exactly is the enabling environment, and what is its role with respect to rural youths? Here in FAO every day we have a thought of the day that is posted on the intranet. And this is how I start the day. As soon as I turn on my computer, I go there. That's the morning routine, and look at the thought of the day. As you can imagine, usually it's a statement by somebody wise who kind of makes you stop to think and smile. And so this morning, as part of this routine, I also went Googling to see if I could find a statement that would help me describe in a thoughtful way what the enabling environment around rural youths and the role that it plays is. And I came up with something that reads like this. I'm going to read it. Dreams are the fuel that powers the journey of the youth. Now, don't get me wrong. I don't mean to say that a good enabling environment around rural youth is a dream, although, sometimes it might as well be, but I'm more interested in the second part of that statement. I mean to say that thinking of the enabling conditions of the enabling environment as the fuel that powers the journey of youth is a good way to characterize the role that the favorable enabling environment can play. It powers their journey, and it is super important. So that's why I feel that this webinar today, given its focus, is of particular interest to a broad audience, and I hope the numbers of participants connecting to attend the webinar today will show that. I would like to start with expressing appreciation for our colleagues and partners at GIZ for the fruitful collaboration of the last few years. On behalf of the FAO Inclusive Rural Finance team, whether bilaterally or in the framework of the CAPFIN partnership on inclusive rural finance. So thank you very much. It has been a good experience, and we hope that we can strengthen that going forward. For the opening session, I would like to invite and give the floor to Mr. Kazuki Kitaoka, who is the director of the newly established Office for Youth and Women in FAO, and to Mr. Jonathan Zibula, who is the head of the sector Project Agriculture at the Division for Rural Development and Agriculture in GIZ. Thank you very much, Kazuki and Jonathan, for joining us today and for sharing your time with us. I give you the floor for the opening remarks, starting with Kazuki and then Jonathan, please.
Thanks so much, Azita, and good morning, good afternoon, good evening to all of you. It's a real privilege to be here for these opening remarks. And thanks to all of you for joining us today. Perhaps just some words on my office, the Office of Youth and Women here at FAO, which leads the work of the organization on advocating for the important role of youth and women in the various processes of agri-food systems transformation. And Azita, I think there are still a lot of dreams that are dependent on the work that we're doing. And I think one of the important things that will probably make this dream come true will be hopefully this milestone report that is going to be launched today on enabling markets of financial services for the rural youth. But of course, we are working on quite a number of initiatives in this context. And in this, I would like to also mention the platforms that are being created by the World Food Forum and the Global Youth Action Initiative in particular, which is really going hand in hand with the work that you are doing in your division. It is a pleasure to be here for this important session, really. And empowering rural youth through financial services is really at the core of one of the biggest challenges that we see. Today's discussion is therefore especially crucial, considering the significant numbers of young people it impacts around the world. In fact, there are currently about 600 million young people residing in rural areas. So this is the impact that we hopefully will talk about in developing countries. And these represent approximately half of the global youth population aged between 15 and 25. These young people are some of the most financially excluded and underserved segments of rural populations. And the vulnerability aspects that specifically characterize rural youth tend to intersect with a range of broader macro level trends that are increasingly affecting rural areas in developing countries, such as, for instance, the rising impact of climate change and the rapid advances in agricultural technology. Rural youth from all backgrounds struggle, of course, to access quality financial services due to the stringent regulations that we see, like age constraints for opening bank accounts or applying for loans and so on. And as a result, they often rely on informal financial providers, family, or informal moneylenders. So this situation is obviously unacceptable and needs to be addressed. So this report is really very welcome. This situation is even worse for young rural women, who, as shown by the World Bank data, tend to be one of the most financially marginalized categories of actors in rural areas. Access to quality financial services is crucial not only for unlocking the potential of these young individuals, but it's also for driving sustainable growth across all of their communities. And without reliable financial services, young people in rural areas will find it difficult to pursue education, build assets, or expand their businesses, despite their abundant drive and innovative ideas, as we know, are plentiful around. This is not only a barrier to individual progress, by the way. This is indeed holding back entire communities, entire economy. So here you see the magnitude and the importance of this report that we have at hand today. But today, let's focus not only on the challenges, but also very much on the insights and recommendations of this paper, and in particular on the solutions that it provides. We here in the Office of Youth and Women at FAO, we believe that youth are not just the leaders of tomorrow, somehow far away, but very much also the leaders of today. And they bring new scalable solutions that can shape a better food future, but to harness, and they can definitely also harness the potential that is around in rural areas. We must address the systemic barriers to their success and their access to resources, particularly financing. This is why today's discussion is so important. The new publication that will be presented, again, Enabling Markets of Financial Services for the Rural Youth, developed by the FAO and GIZ, explores the main barriers to youth financial inclusion and provides insights on how policymakers and other public stakeholders can create a more enabling environment that can help mitigate all of those barriers that I was mentioning before. By addressing these challenges, we can help create an environment where rural youth can innovate and contribute to the transformation of agri-food systems in a positive way and in a way which makes their dreams come true. In this sense, platforms like the World Food Forum, as I mentioned before, the Global Youth Action Initiative in particular, are crucial, and they offer youth the space to share ideas and gain visibility to attract investment. This paper highlights the role that public decision makers can play in promoting innovation among the young rural entrepreneurs, providing them with key services, both financial and non-financial, that they need to make their entrepreneurial ideas a reality. Through our Youth Innovation Lab, and here I talk about the Youth Innovation Lab of the World Food Forum, this is exactly what we're trying to do. And we foster youth-led innovation, providing seed funding to help young entrepreneurs develop their startups and ideas. But of course, seed funding is not enough. It needs an enabling environment. And again, this is why this report is so important. By connecting them with investors through platforms, we enable these young innovators to secure the much needed resources. Additionally, through our Youth Food Labs, we also offer trainings that help young people to turn their innovative ideas into practical solutions. Our youth education program in the World Food Forum also provides youth with the skills and leadership needed to succeed in the agri-food labor market. Skills that would, in many cases, be out of reach due to financial limitations. And we believe every young person, every young woman and men should have the opportunity to realize their potential and contribute to agri-food systems transformation. But we must ensure that actions to address barriers are contextualized to local realities. In many cases, barriers to financial services differ. It depends on the context, and it depends on the country. It depends on the even within countries, the regional, the sub-regional location, and cannot be addressed with a one-size-fits-all type of solution. In this sense, the Global Youth Action Initiative of the World Food Forum is trying to make great progress in localizing its action. This is happening through the development of national youth chapters that are bringing the activities from the global level to the regional and the national level. But again, for all of this, it is important that enabling environments are in place. As we move forward with this discussion today, I encourage all of you, all of us, to think about the practical context and the context-specific solutions we can implement to address the financial exclusion faced by rural youth. You can be ensured that we will be standing ready to work with you, and we should discuss how we can ensure that these young actors have the financial tools, the education, the support that they need to lead the way forward in building a more sustainable and inclusive agri-food system. Together, through platforms like this, we can create the conditions for young people to strive and to drive towards a better food future, I believe. I invite you all to get involved in the Global Youth Action Initiative of the World Food Forum as well. Of course, get involved in the follow-up discussions of the recommendations of this important paper that we are launching today, and get involved to ensure that youth are put in the driver's seat when it's coming to the transformation of our agri-food systems. And with that, thank you very much. It's again an honor and a pleasure to be here, and I look forward to the discussions that we have today. Over to you, Azita.
Thank you very much, Kazuki. The floor is for Jonathan, please. Thank you, Jonathan.
Thank you very much, Azita. Good afternoon, distinguished panelists, colleagues, and participants. On behalf of GIZ, I'm honored to welcome you to this important webinar. Allow me first to express my gratitude to our partners at the FAO and the broader CAPFIN partnership for convening this session and for our productive collaboration over the years. And I would also like to say thank you to you, Mr. Kitaoka, for your welcoming remarks, opening remarks. I think that has really set the stage for meaningful and engaging discussion. Today's topic is more than just timely, actually it's urgent. And Mr. Kitaoka, you mentioned it, there are 600 million young people, over 600 million young people living in rural areas of developing countries. And these young adults are facing challenges in accessing adequate financial services that are not merely economic, but really systemic. Promoting financial inclusion of young people is not only a matter of providing access to credit or savings accounts. It is really about creating a foundation for them to achieve socioeconomic independence, realize entrepreneurial ambitions, and build resilience in the face of challenges like climate change and economic uncertainty. Rural youth are confronted, and I think this is really crucial, this is really core, I want to underline, they are really confronted with a double burden. It's not only that they are operating in the inherently high-risk agricultural sector, but they also face demographic-specific obstacles. And without targeting or without targeted interventions to address these obstacles, barriers, we really risk leaving them behind, and that should not happen. Let me also look at the broader picture. For me, it's important to mention that this discussion forms part of our global efforts as GIZ to address critical challenges in rural development, financial inclusion, and youth empowerment. It aligns with international dialogues. I would like to mention the UN FSS Summit and stockholding process, as well as continental initiatives such as the African Union's Comprehensive Africa Agricultural Development Program, whose new strategy was recently adopted just beginning of the month in Kampala. Actually, I was there, so I had the honor to listen also to the African leaders and African nations that became very clear, recognized the empowerment of rural youth as a vital factor, a very crucial factor actually, for decent job creation and economic growth. Yeah, so I really believe that platforms such as the Rural Finance Labs play a very important role to take this up, to support, and most of all, to bring relevant stakeholders and actors together. So as we already heard, this webinar also marks the launch of the joint FAO-GIZ paper. And at this point, I would really like to mention Atseta Jungo and also Benny Niklas. So thanks for your contributions, for your collaboration, for your efforts making this paper happen. And as also already mentioned, the central focus of the paper, we can say, is the importance of a robust policy frameworks that it highlights. So today's panel discussion will firstly focus on identifying the key regulatory and sociocultural challenges that hinder youth financial inclusion. And secondly, it will focus on exploring actionable pathways to address these issues. Mr. Kitaoka, you also mentioned it. It's very important to really look at the solutions, not only at the challenges. And as I'm working for an implementing agency, I really would like to underline that. It's crucial that we bring solutions to the ground. And in this sense, I warmly welcome all of you to this important session. Let us engage in an enriching dialogue with our distinguished panelists. I encourage all of you, all of us, to actively share thoughts, comments, questions as we collectively explore how to strengthen inclusive ecosystems for rural youth. Thank you very much. Back to you, Atseta.
Thank you very much, Jonathan and Kazuki, for these welcoming remarks and for the good introduction that will allow now us to move now smoothly to the next part of the webinar. 2 words very quickly on process and a bit of housekeeping. So we will listen to a brief presentation for about 15 minutes. Then we have 20 minutes for panel discussions and 20 minutes for interactions with the audience, Q&As and the like. So we need to be good with timekeeping because we don't have a lot of time available, as a matter of fact, and the topic is so, I can imagine the discussions will be very rich. The topic is of great interest. So I would like to urge everyone to please make every effort to be concise and stay on time. Feel free to send any questions in the Q&A box here in Zoom, but know that we will address the questions from the audience at the end after the panel session. And then finally, I would like to inform that we are recording the event and that the video will be made available for the participants afterwards, like a day or 2 after the event itself. Now we move to the next step here. I would like to invite to you Juan Buchenau and Niklas Benny for a brief presentation of the main findings, some key findings from this FAO and GIZ study that has just been published. The study is actually a deep dive. It deep dives into some key aspects of the enabling environment that can facilitate or pose raise barriers really to financial provision for youths in rural areas, and on how these barriers could be overcome in order to improve the enabling environment to create more favorable conditions. For those interested on the publication itself, we will put the link in the chat. I think my colleagues are doing that. Let me introduce our presenters. Juan Buchenau, Juan is senior financial sector expert specializing in agricultural finance and cooperative financial institutions. Until recently, he was with the World Bank's Global Agricultural Finance team, where, among other things, he led the community of practice on cooperative financial institutions, focusing on policy, diagnostics, and reform. Still with the World Bank, he has managed several financial sector support programs in Latin America and the Caribbean. Before joining the bank, Juan worked for many years in the rural finance and microfinance sector in various capacities. He has a Master of Science from the University of Hohenheim, and I hope I'm pronouncing this well, in Germany. If not, you will forgive me. Niklas is a rural and agricultural finance specialist with inclusive rural finance team here in FAO. He works a lot on the financial inclusion of rural youths and women, digital agri-finance and agricultural insurance, amongst other things. In the past, he has worked with IFAD, the International Fund for Agricultural Development, United Nations High Commission for Refugees, and various important UN institutions and NGOs. Nicolas holds a Master of Science in Development Economics from the University of Bocconi in Milan and is a graduate of the Rural and Agricultural Finance Program of the Boulder Institute of Microfinance and the CAPFIN Partnership. He's currently based in Panama. Nicolas and Juan, the floor is yours for the presentation. As you know, you have 15 minutes, please.
Thank you, Azeta. I just want to confirm that you can see the slides properly.
Yes, we can.
Perfect.
At least I can.
So, okay. So good day, everyone. I'm just gonna take a few minutes together with Juan to try and set the stage for the panel discussion and explain why we decided to develop this publication, which is a co-authorship between me, Juan, and Azeta herself. So as Mr. Kitaoka was mentioning during his introduction, young people in rural areas of developing countries are one of the groups that have been traditionally among the most severely marginalized and underserved by the formal financial sector. So commercial banks, microfinance institutions, financial cooperatives, and on average, they tend to present lower rates of financial inclusion regardless of the indicator that we look at, access to credit, savings, insurance, and so on and so forth. And arguably, the financial exclusion, the lack of access to suitable financing, is one of the key bottlenecks that really stifle the youth's capacity to express their potential as entrepreneurs, right? That stifle their entrepreneurship, their capacity to kickstart and expand a business idea they might have, create economic value in rural areas, generate innovation. And it can also be, if you think about it, an indirect factor that really can prevent them from navigating successfully some important phases of the transition to adulthood, the school to work transition, pursuing further education, marrying, having kids, and so on and so forth. So you can see in this slide a range of common constraints that the rural youth face when it comes to accessing and making use of financial services in rural areas. Some of these constraints are endemic to rural areas. They are common among all rural dwellers, but they are particularly felt by youth. Consider, for example, the low levels of financial education that tend to be lower among youth than their older counterparts, and of course affect their credit profile, less business experience, lower business management skills, lower rates of access to conventional collateral, such as land titles that can be used as guarantee for a loan, and so on and so forth. There are also other constraints faced by the rural youth that are unique to them in a way, that are specific to them in virtue of their age. Many financial regulatory authorities set some very hard limits in terms of age, before which a youth cannot ask for credit, cannot open autonomously a bank account. Many financial institutions often have an intrinsic bias especially in rural areas, against lending to young people. So a range of, I would say, specific constraints that are faced by youth. And of course, young women are particularly at a disadvantage here because they face constraints that stand at the nexus, right, between the barriers they face to financial inclusion because of their gender and the barriers that they face because of their age. And this is something that I really hope we'll have a chance to discuss more in depth during our panel discussion. So in this frame, it is evident, right, that national policymakers, ministries, central banks, but also development agencies, development financial institutions have a really important role to play when it comes to building a more enabling environment for youth financial inclusion and address, even if indirectly tackle, all these various barriers that are limiting the financial inclusion of the rural youth. So I'm talking about the range of regulatory barriers, infrastructural constraints, socioeconomic discriminations, all sorts of limitations that really prevent youth from making a healthy use of financial services, both for their businesses and in general for their personal lives. So we sought in this publication to really explore and present how specific policies, reforms, regulation, instruments, both policy instruments and programmatic interventions can help create a more enabling environment for youth financial inclusion and can help lay the ground for the development of a more varied and suitable offer of financial services for the rural youth. A range of financial services that have been developed specifically, not just on the needs of the rural youth, but also on their strong points. And I hope that this publication will provide you with some food for thought in this regard. I'm leaving the floor to my colleague Juan, who is moving on to the next slide.
To start, just one comment regarding the title of the publication. We focus the publication on enabling markets, and it is important to highlight that we're looking at both, at the supply and the demand of financial services for rural youth, which are have to be considered both in this context. So when we speak about the policies affecting the financing of rural youth, and we look at the different countries, we see that these policies can come from very, very different aspects. On the one side, they can come from financial inclusion policies that are geared to increase financial inclusion in general and which can have specific targets and actions for rural youth. Then you have agricultural and rural development policies, which usually are aimed to increase production and that may have also actions for rural youth, and policies that are directly geared to promote youth socioeconomic development, usually very much related to entrepreneurship and to develop capacity of youth in this sense. So policies for aiming to increase the access to finance of rural youth can be hosted in any of these three domains, and this is important to know when you look at the different countries. Now, to be effective, these policies must, on the one thing, it's clear they need to include a specific objective of increasing access of rural youth to financial services, so that they can be also measured by that. And the second thing that we have seen is that they have to involve the young rural people when they're being designed and implemented. Best practice is, especially in the case of financial inclusion strategies, is to have also youth representatives of the youth groups participate in the design, implementation, monitoring of this policy so that they remain focused on rural youth. Next one, please. Next. Yeah. So suitable approaches to foster the financing of rural youth, they require, of course, proper laws and regulations. Nicholas has already alluded to the issue of minimum age, but then there are also things that can be very, very constraining for rural youth, are KYC requirements that can be very onerous for rural youth to comply with. And then You have, of course, the collateral requirements, which are often mandated by regulations of the central bank. So these are regulations which are important in facilitating access of rural youth to financial services. And then on the other side, there are the proper policies and programs geared to increase the participation of rural youth. And to be successful, these programs need to have some characteristics. The first one is they have to involve the right financial service providers. The right financial service providers means service providers that show a credible interest in serving the rural youth, and that have also part that the serving rural youth see serving rural youth as part of their business proposal, and that also are already present in rural areas. An urban institution will not be able to serve rural youth. So these two characteristics we have seen are key in selecting institutions to participate in these programs. The second characteristic of these programs is that they have to partner with other entities that reach rural youth. And there are a host of different entities, of course, schools, but then you have also value chain firms, you have the fintechs, associations of young rural women that help reach these segments. It's key. Partnering is key if we want to increase access of rural youth to financial services. And the third one is that these policies and programs should enhance the knowledge and gather granular data about the different segments of rural youth. Rural youth is a very, very diverse group of people. You have on the one side young people who are not yet engaged in work life. You have people who are studying. You have women. You have young mothers. You have young fathers. So it is a very, very diverse group. And learning more about this group is a very key aspect. Usually, we don't know much about access of rural youth to financial services beyond fintechs. Financial institutions could do a lot to get more granular data. So these three characteristics are key for the development of policies and programs. Next one, please. Now, when we look from the perspective of the financial service providers, the financing of rural youth offers promise, but also significant challenges. So the opportunities is that it is a very large potential market segment. And this is very attractive, or can be very attractive for financial service providers. The second one, which is also very important, is that young people are first-time clients in many cases who have not had before a relationship with the financial institutions. And the relations they establish with the first financial institution is usually fraught with, is also marked by loyalty. Young people who open an account with a financial cooperative or with MFI, they usually stay loyal to these institutions if they are well served. That is, of course, key. But if they're well served, the perspective of having a long-term relationship is something that is a key characteristic of youth, especially of rural youth who do not have much access to finance. And then the third one is that, as has been seen in several places, CGAP has done some studies around that, rural youth is a potentially large group, can potentially mobilize large volumes of savings, which can be also very, very interesting for the financial institutions. The challenges, we already spoke about the diversity. So financial institutions need to focus which segments they want to serve, and they need to specialize. If they want to serve young rural women, they need to specialize in that, and they need to see how they structure their activities in a way that they are cost effective, that they have the right partnerships, and so on. So they need to be selective in the segments that they serve. The second challenge is, of course, high costs and small transactions. High costs because it's rural, high costs because of the need to build capacity and so on for the operations. And small transactions. Rural youth is usually not rich. So usually the transactions are very small. And small transactions combined with high costs makes it a special challenge from a business perspective. In lending, of course, Nicholas already mentioned the short no record as borrowers. They also don't have much of a record in economic activities if they are working by themselves. And the question is for the financial institutions, well, how long does it take to cover the costs and achieve profitability? Synthesizing this slide, usually big promises, it can be very useful, but usually it needs time. Institutions need to have a long-term perspective if they want to serve rural youth in a way that they cover their costs and that they have a proper business. Last one, please. You can do another one, please. Oops.
There's no more one.
No, it's the slide doesn't show complete.
This is all.
Okay, then show the, yeah, okay. So the other things that are needed, the left side part of the slide is missing. The other things that are needed to facilitate access to finance is, of course, you need branches, you need networks, you need mobile banking that are accessible to rural youth. And that is in general also for the rural population. So this is key. And then the availability of having basic accounts is also something that is a facilitator to facilitate access of rural youth. Basic accounts which don't have big requirements to be opened and which have a number of small number of transactions that they allow and which are cost-free or very, very low cost accounts. This is something that is key to facilitate access, as we have seen. And then the last point, which is very important, is capacity building. And capacity building of both, of the rural youth in financial literacy. They need to know budgeting. They have to have economic abilities for income generation. So there is a whole area of work, which again, going back, requires partnerships between financial institutions and other providers, or between government programs and different providers. And then capacity building of the financial service providers is key. And that is there, we already mentioned, the segmentation of rural youth, learning to understand this market, this is key. And the secondly, very important, is the design of client-centric financial services and delivery channels that build relationships and that generate information. That is also something that is key to decrease the costs in the medium and long term. Key, absolutely, what we have seen is not to focus at the beginning so much on lending, but much more on savings and transfers, which are the services most demanded by rural youth and which can bring them closer to the financial sector and create these relationships that will hold their development, or they will support their development in time. So far, thank you so much.
Thank you very much, Juan and Nicolas. So a lot to talk about, a lot to think about. I'm sure that we will be coming back to some of these issues that you covered in your presentation during the panel session and also in the Q&A with the participants. So if you are okay, I suggest that we move on with a panel session for a conversation with 4 external experts around issues that speak to the creation of a more supportive context for the financial inclusion of rural youths through a combination of policy and also programmatic interventions. In addition to Juan and Nicolas that I introduced and who just presented to you, I am delighted to welcome also Danielle Hopkins and Peter Mina for this panel session. I take the opportunity to thank the Netherlands food platform Benche and Marielle for putting us in touch with Peter. So let me very briefly provide a bio of Danielle and Peter. Danielle is a financial inclusions advisor with the United Nations Capital Development Fund. She's a financial inclusion professional with more than 20 years of experience working with a wide range of stakeholders in the public and private inclusive finance sector in over 25 countries in Latin America, Asia, Africa, and the US. She works on youth financial inclusion, entrepreneurship, women's economic empowerment, digital financial services, financial and digital education, and related programs and product design, as well as policy formulation and implementation. Danielle holds an MA in International Development from The Ohio University and a BA in International Relations from Buckwell University, also in the US. Peter is a senior manager for next generation jobs at Root Capital. He is responsible for crafting Root Capital's strategy around unleashing rural youth potential in agriculture through stimulating the growth of the formal jobs for youths within Root Capital clients, as well as supporting young entrepreneurs who are keen on building climate-smart enterprises. That's a great one, Peter. Peter brought to Root Capital several years of managerial experience and management consulting work. He has a bachelor's degree from the University of Nairobi and from University of Navarra in Spain. So welcome to all four of our speakers and panelists. I would like to start with a general question. We heard from Juan and Nicolas on how the enabling environment affects access to finance for rural youths. What I think would be interesting for the audience to hear is, in your opinion, what are the most critical aspects of this enabling environment that should be addressed as a matter of urgency, as a matter of priority, and how? Of course, a lot of this you will say it's context specific. But if you could isolate one or two that are, of course, important, but also, kind of have a broad validity, broad relevance, I think this conversation would be a worthwhile one to have. So, and then if you could, when you respond, if you could also use examples on concrete experiences in the countries, that would be lovely. Who wants to start? Who wishes to answer this question amongst our panelists? Please jump in.
Okay, I can start, sure.
Yeah.
Yes,
Thank you, Danielle, for breaking the ice.
Yes, sure, no problem. Thank you to FAO for inviting me, and hello to all the panelists. I think we heard about some of the barriers, which are pretty common among youth and rural youth, and just the importance of really contextualization and segmentation of this very important segment. So I think some key tools in the enabling environment is really to integrate youth as a key target group in strategies and policies at the national level. So national financial inclusion strategies, national financial education strategies, I think are really key. Also, integrating, we heard about the importance of training and capacity building. So integrating financial education into the national curriculum. I would also add the importance of digital financial literacy, as we're now in an age of digitalization. I think that's very important. So I've been working, just a few examples, with UNCDF to integrate digital financial literacy and make some recommendations into their national curriculum in some Pacific islands, Vanuatu being one of them, and some others that will be rolling out. So I think it's really important to integrate it into the national curriculum, to reach in-school youth, but then also partnerships and coordination among different stakeholders to reach out-of-school youth. And then I just want to share one slide, just briefly, as I talked about integrating the youth into financial strategies. I think it's important to follow a staged approach to this when you're trying to integrate youth into these policies. So this is something I developed with AFI, the Alliance for Financial Inclusion, looking at a life cycle, and this could be appropriate for a national financial education strategy or a national financial inclusion strategy, and having this staged approach of pre-formulation, formulation, implementation, and evaluation, and conducting these diagnostics and analyses to really identify the needs of youth, I think is really important. So then you can design appropriate policies and strategies to meet their needs. So this is just kind of a staged approach that that shows and how you can integrate youth and their voice and engage them throughout the process. Thank you.
Thanks a lot, Marielle. Marielle, I'm sorry, Danielle. I'm sorry. Thanks a lot for that. Anybody else from our panelists would like to add to what Danielle just talked about in
Yeah,
terms of
happy.
what you feel is urgent and should be dealt with as a priority in terms of creating a favorable environment for youth financial inclusion? Yes, Peter, please.
Yeah, happy to jump in after Danielle. One of the things that really resonated with me in the report and also listening to the other panelists speaking is the importance of segmenting and really understanding what are the unique needs, challenges, and opportunities that the youth segment, faces. And so that really gives visibility not only to government but also to financial service providers and nonprofits as to how exactly they can tailor their program. So I can give two examples. At Root Capital, for example, one of the innovative ways that we've approached financing for young people is our credit plus capacity building model, where we work with young businesses who are perhaps not ready for commercial lending yet. And so what we typically do is that together with our lending, would offer them capacity building either in their financial accounting and reporting, or their agronomic practices, or their digitalization. That's to make sure that they're building the structures and professionalizing the business so that in the next 2 to 3 years, they might not need financing from a social lender like we are. They might actually be able to get financing from a commercial lender. So that's one interesting model we've tried and tested, and we've seen that it works very well with young people. The other one is the importance of blended finance, right? So a lot of the times young businesses need multiple things. They might need, to acquire some specific assets, or they might need a working capital loan to finance their operations. And it's important for financial service providers and even the government to be cognizant of this and to be able to tailor programs to suit that. And the blended finance could be, for example, and this is something we've experimented with at Root Capital as well, that you could offer a working capital loan to finance the day-to-day operations at market rate interest rates, but then you could accompany that with either a small grant or a very low interest loan that's going for a specific intervention. Either it's purchasing an asset or purchasing land or whatever it is, that's going to significantly set up the business for success in the future, right? So I think those are two models that we've seen to work very well for young entrepreneurs, and it's something that at a policy level, we need to think about how we encourage more financial service providers to think about that model.
Thank you, Peter. Yeah, I've got Juan here who's raised his hand. Juan, please.
Actually, I have a question for Danielle. In this this very nice scheme of policy development, is also youth involved in the policy formulation and development monitoring? And what's the experience?
Yes, thank you. So I can share just an example from Rwanda that I think I was going to use this for the next question, but I'm happy to share this as well. So just in terms of, if everyone can see my slide. Yes, so I was working with the National Bank of Rwanda and the Access to Finance Rwanda. And so this is a way that in terms of stakeholder coordination and engaging youth. And so you can see here, they have segmented the governance structure by this target segment. And you can see for the Children and Youth Working Group, the line ministries, of course, the Ministry of Education, Ministry of Youth is very important to involve the different line ministries, Ministry of Gender, but also the National Youth Council. You can see here the NYC is a key member. We heard earlier from the opening remarks about the importance of national youth chapters. So that's a way to engage youth at the different levels. And then you have NGOs, financial service providers, and et cetera. So that is a way to engage youth. And so I have worked with national youth councils and done different focus groups with youth to identify what they see as the priorities, and even shared in this particular example to get their feedback. So we had a panel with the National Youth Council and other youth representatives to get their feedback on the framework for the National Financial Education Strategy. Thank you.
Thanks, Danielle. Anything else? Nicolas, perhaps, do you have anything you want to add, or should we move to the next question?
Let's move to the next question. I think there's not much more to add in this case.
Okay, cool. The next question is for Peter. Peter, for us here today, you represent a little bit the voice of the youth because you are yourself a young entrepreneur, and also of the investors because of the role, the job that you have at Root Capital right now. So from this perspective, the perspective of the youths and the investors, those two hats that you are wearing today, what do you think is needed at the country level in order to improve the quality of the enabling environment so that it is truly facilitating and encouraging investments in youth-led agricultural and agribusiness enterprises?
Thanks,
Thanks,
Azeta.
Peter.
So I'd say two things. One, I think from a policy perspective, and this depends on the country, obviously, we really need to see that the credit criteria does not automatically exclude youth. And from a lending perspective, one of the big hurdles that youth face actually is the lack of collateral, right? They may not have had enough time to accumulate assets, for example, or even if they're living on family land, they might not have own title to the land. And so it's important that financial service providers figure out innovative ways of giving credit without the young people having access to these kinds of assets. And it could be a mix of things. It could be if a young person is exporting their product somewhere, it could be getting letters of intent to act in lieu of collateral. If they're selling locally, it could be local purchase orders from buyers would be sufficient for them to actually get lending. Or it could be a mix of collateral and one of these other instruments, right, depending on the size of the loan. The second thing that I've also seen work quite well is having youth-focused credit funds. And I'll give an example here. One of our clients who's based in Uganda, then in coffee, they started their business, their coffee winning business in 2021. And very, very young management team. It's a women-led and youth-led business. And they were able to start their business because they actually got credit from a local bank, which has a fund that's dedicated specifically to young women, right? And so they were really able to tailor their product to young women. And this is a person who would, under normal circumstances, not have gotten credit from any bank, right? And they've since migrated to, obviously at the very beginning, the loan was very, very small, but they've since been able to grow the business, and now they're a client at Root Capital. So I think it's important for government and for social lenders to really think how we can partner with some of these local actors, local financial service providers who really have that deep understanding of what the local youth needs. And if it is tailoring credit specific, ring fencing specific lines of credit for these specific segments of people, then that's what we need to do.
Thanks, Peter. What you're saying makes me think of the creating the business case for financial provision of youth, of young women that you were mentioning, no? And actually in the paper that Nicolas and Juan presented, there is a lot of attention being placed on this, on building this business case. And amongst other things, in relation to this, the paper argues that you need to create awareness and promote a more realistic expectations around this with the financial sector especially, but also more broadly. So what is it that should be done in order to strengthen the business case for the financial provision of rural youths, and especially those that are engaged in the agriculture and food sector? Can I ask Juan to address this question, please, if that's all right, Juan?
Yeah, sure. Happy to do that. And there is also a question in the questions and answers which I want to answer at the same time. So what can be done to strengthen the business cases? Well, first one is that the institutions themselves have a business case, that they see this as part of their business. So institutions which see rural youth as part of their business, they will be the ones. And usually it's institutions that are already serving the rural areas, that have experience in serving agriculture in many cases. So those are the institutions which can expand their reach, and for whom reaching the rural youth is just the marginal cost. it is not getting there, setting up shop, learning about the whole market, but having a smaller step to do in order to reach the rural youth. And what can be done to improve the business case is, of course, strengthen the demand. As Peter was saying, with these initiatives, to build capacity of rural youth so that they are better customers, that they are customers who are able to develop in time, who have themselves a sound economic case. This is something that is very, very key, that facilitates then the activities of the financial institutions. And the other one is data. Data is key. Getting information about rural youth, facilitating financial institutions to understand what these groups are about, how they operate. And as the segments are very different, some institutions may say, okay, we go with the people, with the rural youth that is already established, that is already young adults that have already economic activities on their own, or who are employed, who have a track record. Those are the easiest ones. Others may say, no, we want to go and serve the young women, as Danielle was mentioning. Serving young women has specific challenges, needs to have a dedicated approach, is something where you would need to combine efforts of other actors much more than in the case of the young adults I mentioned before. So you need to combine efforts in order to bring in what social structures already exist, what support mechanisms exist, so that they can be then gain access to financial services which help them to develop their economies in time. So these are measures that can be undertaken. But the most important one, I think, from policymakers' perspective, is to have rural youth as a specific target group. I think that is so key. Rural youth needs to be at the forefront as one group that needs to be supported dedicatedly. The same as the experience was made with women a few years ago. Women were marginalized. There was a very big effort to bring women into, to help them gain access to finance. Same needs to be done for rural youth. Thank you.
Thanks, Juan. You mentioned that you also wanted to address a question from the chat. You already did, while
Yes, well, the question is
partially, I think.
that if there are country-specific regulations to keep in mind and who bears the risk for the financial instruments, I just wanted to mention, in addition, what Peter was mentioning. So one thing is, of course, having blended finance instruments is key to help people gain access to credit, and blended finance where the financing also takes some risk. And then the other instrument that can be very useful is partial credit guarantee schemes. And there are several examples of countries in which partial credit guarantee schemes have dedicated windows for women, and fewer cases also for rural youth. Those are instruments that can help to defray the risk. But the risk at the end needs to stay with the financial institutions if we want to build sustainable relationships in time. Thank you.
Thanks very much, Juan. So indeed, for the business case, but more broadly, the stakeholders, the actors will have different objectives, will have an interest in focusing a specific target group, even within the big rural youth group, so to speak. Their approaches will be different. So this makes me think, of course, that with all this diversity and variety, coordination can be a key. So you actually need stakeholders to have the capacities to be able to, to have their necessary understanding and the capacities to build that realistic scenario with respect to the business case, but also to engage meaningfully with the other actors in order to ensure that the overall setting is really supportive, that there is buy-in, that there are no contradictions in how some aspects of the enabling environment, such as, let's say, policies and regulations, are being designed, are being understood, are being implemented. So coordination and stakeholder buy-in, we know that is an issue, because there could be all sorts of misalignments that make then implementation difficult and quite messy, if you want, at times, no? In relation to this, I know that Danielle, over the course of her career, she has been working a lot with different stakeholders in many different countries and at different levels. So I wanted to ask this question to her, to field this question to her. In the course of your career, what has the experience that you have accumulated has taught you in relation to how, in practical terms, we can go about promoting coordination amongst the stakeholders? And my question is also, is this really a meaningful conversation to have, or are we being naive to think that the good coordination among so many different stakeholders and actors is even possible? So if you could talk a bit about that. Thank you.
So yeah, I think it's important, and I think Juan was sort of alluding to this, to take a market systems approach when you're talking about this. So you're looking at the supply side, the demand side, and the enabling environment. And one thing I just wanted to add on the supply side to Juan, what Juan was saying, in terms of the business case, it's really important in terms of, yes, it's strengthening the demand, but also strengthening the supply and really making sure that there are appropriate products for youth. So, you know, some of the barriers in terms of KYC and ID and collateral, where there are, you know, tiered KYC, there's different alternatives for IDs and different alternative collaterals, such as movable assets. So I think it is important to really have tailored products to that are, you know, specific to youth in the different segments. And I will put in the chat a compendium and a toolkit that I developed with FMO and Making Sense that provides different tools for financial service providers and also different personas that, you know, based on the different segments of youth in terms of some barriers and opportunities. So I'll put that in the chat. So I think it's important when we talk about the stakeholder coordination to look at all those different actors. And as I mentioned in my example in Rwanda, I'll just pull up the slide again. I think it's, you know, it's important to engage all of the different stakeholders in the process when you're developing these types of policies specific to youth. And so in this example, when we were developing this, we had a large stakeholder co-creation workshop where we engaged a lot of the different stakeholders from the public-private sector, also youth, and and then we had them separated by their different segments, and they developed and they worked on action plans for the segments. So these actors that you see here for the Children and Youth Working Group, they work together to develop an action plan. So that's just one way to bring together stakeholders where they can all work together. And then also, I think it's important, let me just pull up this slide. As developing policy, looking at some of the levers, and we've talked about these throughout, and they're mentioned in the paper as well, that FAO has developed, but looking at these key levers of youth financial inclusion and all of the different actors. So you can see enabling environment is a fifth lever that we added to a framework that was developed by the African Union, but looking at the importance of employment, education, entrepreneurship, and engagement in promoting youth financial inclusion, engaging those different actors that are involved in that. So I think that's these are just a few examples of how stakeholders can work together, taking that sort of market systems approach and engaging all of the actors that work with the different segments of youth. Thank you.
Thanks, Danielle. So that's good news. It means that there are things that can be done, and we should expect better coordination and, you know, put all our efforts to achieve that. My last question, it's for Nicolas, to continue this conversation on the concrete things that can be done, no, to improve the enabling environment around rural youths. Nicolas, can you share a specific example of tools and approaches that have proven impactful, that have shown success in improving financial inclusion for youths? And I know that while you're answering that, probably you will also be addressing some of the questions in the chat. I've noticed some that you know, go in that direction. Please, Nicolas, the floor is yours.
Sure. So, well, I think one very impactful tool, and it is also something to which we dedicated a section of the study, is agent banking, which can be particularly useful to promote a first entrance, a first access to the formal financial system for the rural youth. just for those of you that do not know, because I don't expect all the audience to be rural finance practitioners, but basically agent banking basically refers to a contract between a formal financial institution, such as a commercial bank, and the owner of an establishment in rural areas, usually at village level, could be a pharmacy, a grocery store, a roadside kiosk. And basically the owner of the establishment agrees to act as a sort of a retail point, right? As an intermediary between the financial institution and the new rural clients. And it allows them to gain access to a very basic range of financial services. So when it comes to the rural youth, these kind of agents can really sort of leverage the proximity, the familiarity they have with these young clients to basically encourage a first interaction with the formal financial system, right? They can act as sort of essential first access points for youth to begin using some basic services, become acquainted with the financial institution. The institution also begins to collect data and sort of develop a more trusted relationship with the young client, which can evolve over time in a more established sort of financial provider-client relation with more advanced, so to speak, financial services offered. And this, of course, is particularly important for young women in rural areas, right? Who are usually more constrained in terms of mobility, in terms of time they have available, safety when it comes to traveling, and which therefore they might find it considerably more convenient and less stressful to interact with an agent at village level rather than trying to go to a banking branch in a rural area, which often might not even be available. And of course, from a policy perspective, it requires considerable regulation on the part of policymakers. You have to define how a financial institution can go about creating these networks of agents, what are the responsibilities of all parties involved, and also how do you maintain a competitive balance between the traditional financial institutions and, for example, mobile money operators who also want to build these networks. And now this would follow up well with some of the questions I see here that relate to the role of fintech and mobile money to promote youth financial inclusion. But I don't want to talk too much, Azeta, so I first leave you the floor and let me know. I'm glad to answer some of those questions as well.
Thanks very much, Nicolas. Yes, we have gone a little bit over time. This always happens. But the panel discussions are always very rich, and but I think it's time, well spent. However, I suggest we stop here with the panel and give the floor to the audience for some questions and answers. I'd like to thank all our panelists for these very interesting conversations that are, as usual, to be continued. I note that while during the panel, we already addressed some of the questions that are in the chat. As a matter of, it's a coincidence, but it's a good one because that way we gain a few minutes. I think I would take the first question that Yahor has singled out for me here on the chat, and that is from I don't know who it is from, but somebody is saying that congratulations for the paper, I suppose. And in order not to repeat actions and to help implementation of this new strategy, I think they are referring to the study. So let's say the recommendations or the findings of the study. What actions are FAO planning to implement to articulate efforts with other Rome-based agencies and youth organizations? So Nicolas, this one is for you, I think, since you are of FAO in the
sure.
Thank you.
Right, there are many examples we could make. I think one interesting project that has been going on for 7 years now in different phases is the ICA project, which is Integrated Country Approach for the Promotion of Youth Employment. Basically, the ICA project is run by FAO. For this particular phase, we are active in Ecuador, Vietnam, and Zambia. It is managed by the Decent Rural Employment team of FAO. And basically, the project seeks to promote entrepreneurship sort of through a multidimensional approach that also seeks to really looks at the role that financial inclusion plays in promoting youth entrepreneurship. For example, in Ecuador, at the moment, we are discussing with local financial cooperatives to basically create financial services, design financial services that are particularly tailored on the needs of young entrepreneurs in the fine cocoa value chain. And so it's basically a matter of working in very close contact with these financial cooperatives, as well as, of course, the agricultural extension services, public stakeholders, to see how it's possible to adapt, to tweak the terms of their credit offer, for example, in a way that makes it better able at capturing these young clients, keeping delinquency rates down in terms of the loan portfolio. And in general, I would have to underline that it's I would call it a holistic approach. So we try to gather and collaborate with all sorts of development agencies, public agricultural banks, ministries. It is never like a, of course, one-on-one interaction with the financial cooperative, but usually it seeks, while assisting these cooperatives in designing these financial services, in building a more enabling environment for these services to prosper, which is, of course, the topic of our publication. And I think it's a good example of the approach that FAO tries to have when promoting youth financial inclusion. Thank you, that's it.
Thanks, Nicolas. Okay, Ramona's question I think was already addressed by Juan, a very good question, but I would skip that because Juan already spoke to that. I'm going to Farah Abdul Sater, and he's saying she's saying, my question is, how do these recommendations take into consideration the challenges faced by rural youths living in crisis situations, such as civil conflicts and droughts, with a particular attention to MENA? To the MENA region. Who wants to respond to this, please? I'm seeking volunteers.
Well, yes,
Juan,
it's a very, very difficult situation in conflict situations. So we did not look specifically at conflict situations in this paper, but definitely that what is stated there is applies the same or similarly to people living in conflict situation. But you will need to have also special approaches, especially in regards to serve the people who are displaced. Displaced people need to have a very dedicated approach so that they are reintegrated into economic life. Again, the issue of partnerships is key. In the case of people living in conflict, the linkage between financial services and also humanitarian help, in many cases, people will be getting some money dispersed. That is something that can be leveraged. I know that in Lebanon, they have, for instance, leveraged these type of payments through Village Savings and Loan Association. So that works too, and that would also apply, of course, for rural youth. So the whole conflict situation is something that requires a dedicated approach, and targeting specifically youth in these situations is key, because rural youth is also oftentimes one of the most affected population groups, and also in some cases recruited by terrorists and so on. So this is absolutely a very important point. Thank you for raising it. But yeah, we did not address it in this publication.
Thank you, Juan. I'm moving to the next question by Mr. Yusuf. He's asking, are there any successful practices and practical tips for enhancing access to tailored financial services for rural youth in Africa, considering the role of an incubation center, for instance, rather than a financial institution? Anybody vouching to to answer this? Should I repeat the question? Let me read it again. Are there any successful practices and practical tips for enhancing access to tailored financial services for rural youth in Africa, considering the role of an incubation center rather than a financial institution? So how can you enhance financial inclusion through an incubation center rather than through a financial institution?
If I may, maybe I can answer briefly.
Yeah, Nicholas.
Usually, rather than, I would say it's a complement, right?
Exactly.
So an incubation program usually provides the variety of non-financial services that also improve the client profile for that particular youth-led enterprise in the eyes of the formal financial sector. So capacity building, technical advice, connection to markets once you have an established product, and so on and so forth. So I don't really see it as a either or. It's more like these kind of service providers, incubation, acceleration programs are usually a complement that can also be a gateway to financial inclusion.
But maybe to add to that, these type of programs usually are very intensive. So they will not reach very large numbers of people. So they will reach a few people, but it may be generating employment and maybe generating other benefits. But I fully agree, it's a complementary situation.
It's complementary, yeah. Thank you both. I'm afraid we need to close. I'm really sorry. I know that we have so many questions and we could continue our discussion on this, but that's all we have time for today. We are a little bit over time, not too much. Let me thank very much the audience for joining us today and our speakers and panelists for sharing their thoughts and their experiences with us. Of course, there is no time for a proper wrap-up, but that's not a big loss. I always prefer better to give time to the discussions and the questions and answers. But please know that those who would wish to refer back to some of the discussions today or the presentation, you have the opportunity to look at the video, the recording that will be made available to everybody in a couple of days, perhaps. Let me thank again all the speakers, participants, and all those who, Mr. Kazuki and Jonathan, for the opening address, and all the colleagues here in FAO who worked hard to put this session together. Carolina, Leo, Yahor, our audiovisual support colleagues. I hope I'm not forgetting anyone. And to all our partners and colleagues who helped us disseminate and promote the event. Thank you very much, everyone. Have a very good afternoon or evening, depending on where in the globe you are. And goodbye till the next one. Thank you very much.